What's up, everybody? This is Josh from Red Shorts Trades. You know, every time in trading, every now and then, when you win, you also are going to lose. And that's what we're going to go over today. I took 2 trades this morning on the same ticker on Tesla, and I'm going to show you why I was optimistic about jumping into the trade, but ultimately what ended up happening, which caused me to stop out of the trade. Stay tuned. Welcome back to the channel. Just so you know, if you're curious about what broker I'm using, I use Webull. I have a link down below. You can check out the broker. There's a link to sign up if you want to get involved with Webull as well. On top of that, I'm going to have some links down below to ebooks that I've written about my strategy, about candlestick patterns to help continue the learning for you as you're continuing your trading journey. I hope they're helpful. If you have any questions, please drop them in the comments below. But let's jump right into our trades that we took today. I want to obviously recap, break down exactly what we saw, what we were looking for, and go from there. So just a reminder, there are 3 key things that I look for to identify a trade. I'm looking for a higher time frame structure break. Now, these structure breaks could be from just breaking out of a prior day consolidation, so the prior day high or the prior day low. It could also be a higher time frame trend line break, or a higher time frame flag pattern break. Anything that is on the higher time frame that's ultimately allowing me to see that we are breaking out of a particular consolidation pattern, because typically what ends up following that is momentum. And that brings us to key point number 2. Momentum intraday is key in order for us to take trades that are ultimately going to move in our favor. It increases our confidence, it increases our win rate, and momentum is necessary for us to take this strategy of the break and retest strategy, specifically as it pertains to day trading. And then the third piece here is price action at key levels. We mark out our key levels. We mark out our pre-market high, pre-market low, prior day high, prior day low, and then the opening range, opening 5-minute range and the opening 1-minute range potentially, just depending on what the stock is doing. But I look for these in the morning, every single morning when the market opens, 6:30 p.m. or 6:30 a.m. 6:30 a.m. Pacific time, in order to take the trades. Now, there's some key things we have to keep in mind every single time. We have to make sure that we are waiting for candles to close. This is an example of a winning trade I took yesterday. And this particular example, I had to wait for the candle to close, but because I waited for the candle to close, did not close above my stop loss. It ended up working beautifully in my direction. So today's example was not the case where it ended up doing this, and we'll show exactly how those losses ensued. But waiting for candles to close is a big thing I'm trying to work on in my trading, and I highly recommend you do as well, because if you don't wait for candles to close, you don't wait for your trading plan to work out, you will miss out on potential gains, and you will cut your losses too soon when your thesis was right and they're going to be working in your direction and working in your favor. But you'll cut your losses and overextend your losses because you are not waiting to trade your plan. You're getting so scared because the P&L is dipping in the negative that you don't end up actually sticking to your plan. And if you get a little squirrely, then you might want to size down a little bit until you get these disciplines built into your system. And this is an ongoing thing. The trading is 99% psychology and 1% strategy here. So making sure you're figuring out how to discipline the psychology to wait for candles to close, to be able to hold through your entire plan, is essentially what is going to make or break you as a trader. The next thing I always look for, price action at key levels. I want to make sure I'm paying attention to candlestick patterns. If the right candlestick does not materialize, I'm not going to jump into it. I'm looking for candlestick camels. I'm looking for candlestick candlesticks or bullish engulfing candlesticks around my key levels. So we'll see exactly what we saw on the Tesla trades that caused me to take it. Today, we actually had on the second trade something that's a bit newer that I've been testing out, and it's the reclaim of specific key levels. Specifically when a stock changes market direction and market structure, and we are reclaiming a level, even if the first trade didn't work out. The 84% rule ultimately states that 84% of the time when a trade setup, a thesis doesn't play out the first time, if it materializes again, then you'll be able to take it a second time. And so that was what I played on the second point today, and it unfortunately didn't work out the way that I was hoping it would. So let's go ahead and jump into the charts and review the 2 Tesla trades. So here we are on the Tesla chart. I want to show you a bit about what I was seeing on the 1 hour. So as I've been tracking Tesla, we've been seeing this channel that it's been pulling back in on the 1 hour time frame. We see a high here, a low here, a lower high here, a lower low here, a lower high here, and we've been pulling back here, waiting for this trend line to break or if it's going to continue down. And we saw yesterday, and then overnight we continued this trend line break, which is effectively what caused me to have a lot of attention on this ticker. So we marked out, again, purple for me is our prior day high. And then I also marked out a couple days ago, we had this high here as a potential profit target and a place to bounce from. And then we had this marker here, which was the prior day high, which was a potential profit target. So effectively what I was looking for, my thesis going into the day was I was looking for either a break and a retest of this 414.50s level, and then ultimately with a plan to move all the way up to this 426 level. That was the thesis I was entering the day in. So let's jump into the 1 minute and see what materialized. So effectively what ended up happening, we saw this little break, we saw an initial pullback, and then we saw these upper wicks indicating that buyers kept trying to jump in to push the price up, but then sellers were pushing the price down, but buyers kept trying to overpower until finally we got this candle here. And then we ended up pulling back in here into this 414.40s level. And then we had this pretty decent sized candle here, but I really wanted to wait until we broke above this pre-market level. And then we had this 5 minute opening range level. So if you count 1, 2, 3, 4, 5, this is your 5 minute range level. So I was looking for either a retest of this 5 minute range level or a retest of this prior market level. So my initial thesis to go long here on the trade was effectively something like this. And I was going to wait for a break below. I knew that if I broke below this, it's likely this purple line is likely that the stock was going to consolidate down. So my thesis for my 1 to 2 risk to reward was a retest of this pre-market level with initial targets at high of day, which is my 1 to 2, and then a stronger push up into 426. So I waited, and then what did I end up seeing? Well, I had these 2 entry candles that I ultimately ended up popping in on this first one. As we saw price come all the way back in, we saw sufficient displacement, and we came all the way back in to this pre-market level, which effectively was, we saw sellers try to bring price down into the level. Didn't work out. Buyers stepped in, pushed price back up. So this is the type of wick action I like to see. Could have closed a little bit more bullish than it did, but it was sufficient enough for me to want to step in and assume that risk. So I jumped into this trade, and as you could see, it just did not stick. But I waited until this candle here, this 954 candle, to close below the stop loss, which ended up stopping me out. Wasn't going to hang on to the trade. It was about a 20% loss. So then we just decided to wait, and I was assuming it potentially was going to consolidate down. We ended up seeing it start to reverse. Now, this is important for why I took the second piece of the trade. I'm always looking for market structure breaks if I'm looking at a reclaim of a level. So we had this lower high here, and then we had this lower low here. So for us to be able to have confidence in taking the trade again, it has to break market structure, which means we have to push price back above this prior lower high. Because if you look at market structure, everything is based on higher highs and higher lows. And as the market structure is forming, when you see lower highs and lower lows, lower highs, lower lows getting put in as we move down, that's showing that it's potentially moving into a downtrend. So to see a sufficient reversal, we have to take a look at how market structure is getting broken to see a change of character in the direction that we are ultimately moving. So we waited for this particular level to break, which we saw not only the break of this level, which showed us that market structure was moving potentially in the opposite direction, but we also saw a reclaim of our pre-market level. This was the candle that I hopped in on, and I saw these, not only did we break above, but we came back down and we wicked here. We saw this really nice hammer candle here, indicating a reversal or a reclaim of the level, which potentially would push us up higher. And this again is the 84% rule. And we started to move in that direction, but then we just saw everything start to collapse and fall down here. Again, I did not wait to have things see if they work out just based on the market structure and everything. I stuck to my plan, which was a break below this 414.40s level. And we saw the candle break. I got out of the trade, even though it pulled back in to this market structure before pushing back down. This is newer traders would have potentially thought that it was going to continue to move up and then saw even larger slices down because the momentum was clearly to the downside. So this is an unfortunate thing. The reality is on the higher time frame, what it was attempting to do here, you see this big gap. If you take out the after hours, you see a gap from yesterday's close to today's open. Oftentimes price will do one of two things with a gap up. It'll either continue in that momentum up, or it will retrace down into this area. The reality in hindsight, if there was a lesson learned, one of the things that I saw that I would have done differently about this, I saw these wicks forming, and then I saw this breakout of this pre-market level, and then this pullback, but we were holding this level here. I did have this little flag drawn out that I had thought about entering and on, which would have been a really nice move up to these highs here for a nice profit. But I ended up holding to wait to see more confirmation, just given the size of these wicks. I wasn't sure how true and confident it was going to be. So we got the momentum. Unfortunately, not every trade's going to work out. And so this particular one just did not happen to work out. 2 losses, both about 20% each. So wiped out some gains that we had, but I want to make sure y'all see this isn't a perfect science. We stick to our strategy. We plan our trade and we trade our plan. And that's essential for us to make sure that we are staying consistent and always looking for the same thing. Not every trade's going to work out. Your win rate, you don't need every trade to work out though. Your win rate, if you actually stick to the plan, you will consistently start to see net gains over time. Stick to that 1 to 2 risk to reward ratio, size appropriately, and you'll continue to see things improve over time. And that's everything. So if you like what you're seeing, please drop some comments below. If you have any questions or advice, thoughts, please drop in the comments below. Love to hear from them. I'm continuing to learn alongside you. So if you like what you're seeing, hit that like button and pound that subscribe button like you mean it so you get more of this awesome content. Until the next video, we'll talk to you soon.